What's up everyone, it's Scotty with MoneyVest. So in today's video, we are going to be talking about ELF Beauty. A lot of you guys have been asking questions about this company and whether it is worth buying, whether it's time to just hold off a little bit. It had a huge rally of over 18% after the company reported its fourth quarter earnings and of course guided for fiscal year 2025 as well. Just a massive move to the upside, and the company reporting for absolutely staggering growth on a year-over-year basis. 20 consecutive quarters of growth here from the company, and they have done incredibly well in their cosmetic, of course, sector and their niche. So hope you all are doing great. As always, make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. Links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos, including all the trade alerts, trade ideas, options alerts, as well as all the members only videos, and of course fundamental and technical analysis courses, options course, psychology of investing course, also 50% off, coupon code May50, and both of those expire at the end of this month. So in just in about a week, it is gonna go away. So link's gonna be down below for you to take advantage of that. So ELF Beauty shares soaring over 19% on the day after the retailer indicates its torrid growth may not be over. So this right here was the rally this week. The stock is up a nice 16%. It did push down a little bit after Ulta reported their numbers and kind of suggesting for slowing demand, and the growth is going to be coming down a little bit because of the consumer demand softening. But this right here is the significant jump here on the day yesterday, up almost 19% on the back of its earnings, reporting for about a 77% growth on a year-over-year basis in fiscal year 2024. So their mission is to make the best of beauty accessible to every eye, lip, face, and skin concern. So basically everything related to the face is what they provide for when it comes to cosmetics. In 2018, they were number 1 or number 2 position, 8 cosmetic segments. And in 2024, they are now number 1 or number 2 position in 18 cosmetic segments here, whether it is, the setting spray, the highlight, the contour, the multi-phase, eyelash curler, brushes, primer, whatever, the cosmetic items are. They are eyelash curler, of course, lip gloss, all those things, 18 segments. They're either number 1 or number 2 positioning. So they've definitely grown their business significantly over the years to getting to that number 1, number 2 spot. And as a result, revenues and numbers have also highlighted that. So last year, this was from Chief Mandy Fields, told analysts that last year we started our guidance at 22-24% range, ended the year at 77%. Quote, I'm not saying that we're promising 77% this year for sure, but what I will say is that it gives you a little bit of an insight into our guidance philosophy and what has worked well for us over the last 5 years, taking it one quarter at a time. So really what they're saying is that we like to under-promise and over-deliver every single time, and of course, take it quarter by quarter. 53 cents per share in earnings per share compared to 32 cents, huge beat, and revenue coming in at 321 million compared to 292 million. Again, a very strong beat from the company, reporting net income for the 3 months at around 14.5 million, 25 cents per share, compared to 16.2 million or 29 cents per share a year earlier. And excluding for one-time items, ELF reported earnings per share of 53 cents per share. This right here were the ELF earnings. Again, you'll notice a beat across the board for revenue, EBITDA, earnings per share, and annual guidance. Slight miss on revenue and EBITDA because market expectations were a little bit higher. So they were expecting for just, I believe, so yeah, there we go. So about $1.2 billion, $1.27 billion in revenue with a 27.4% uptick in year-over-year basis is what analysts were expecting. And they guided for net sales between 1.23 and 1.25 billion, increase of about 20 to 22% from the company as well, and forecasting an adjusted net income between $187 and $191 million, and adjusted earnings to be between $320 and $325 for the company as well. So if you do a very quick math here, 184 divided by 325, so 184 divided by 325, we're looking at a 56 times earnings, a multiple for ELF, which obviously is very, very high compared to the earnings growth. We'll take a look at that in just a minute, but this right here, so ELF Beauty has been on a tear over the past year, posting sales gains in the high double digits quarter after quarter, and as consumers flock to its low-priced beauty products, either through its own website or at retailers such as Walmart and Target. ELF CEO Tarang Amin said he believes the company is still in the early innings of its growth story and expects more to come in cosmetics, skincare, and international markets. Its guidance reflects that sentiment, but even so, the company expects to grow at a slower pace than Wall Street anticipated as well. We've seen a slowdown in total category. Kimball said this was from Ulta Beauty. So this right here, Ulta Beauty CEO Dave Kimball threw cold water on the red hot beauty category and basically mentioned that they do see a slowdown in the total category. They came into the year, and we talked about this on our earnings call a few weeks ago, expecting the category to moderate. And as I said, several years of strong growth, we did not anticipate it would continue at this rate that it's been growing. So they did expect to slow down. ELF continues to see a little bit of that growth of 22%, and they're expecting to maybe overshoot that target as well. That definitely goes to show that Ulta has some type of moat, some type of pricing power, some type of leverage over the industry where they can continue to produce such types of gains and, of course, growth here on a year-over-year basis. So 77% increase in net sales, 330 basis points gross margin expansion, 101% increase year-over-year on adjusted EBITDA, and a market share of increase of about 3% for the company as well. And this right here were the overall numbers, bar graphs suggesting for absolutely massive growth here in fiscal year 2024 for the company, posting every single quarter of just massive increases in revenue, 21st consecutive quarter of net sales growth for the company as well, and overall 21 quarters of over 20+% growth here for the company. Unique ability to deliver the holy grails. So these are some of the products that I wanted to highlight. This right here is going to be fiscal 2025 outlook. Adjusted EBITDA 285 to 289 million. Adjusted net income of just under $200 million. So even if we assume, let's say about $190 million from ELF, year 1 through 5 growth rates of about 20%, which I think over the next 5 years could be a little bit on the higher side because the company's been, posting a very strong 77% growth rate. They're guiding for 20 to 22%. And over the next 5 years, that growth rate could start to slow down because it's not going to keep going up by 20, 30, 40% every single year. So I think those numbers are a little bit more on the optimistic side. And as we already learned that the company is trading on a forward earnings multiple of 56, I think 30 is way more reasonable, 12% discount rate, 10% margin of safety, no share dilution, and we're looking at a fair value of about $130, which means about 29 to 30% pullback needed for it to be trading at its intrinsic value. And when it was trading down to, let's see, as low as before the rally at closer to 150s, it was still very close to its intrinsic value. So this, in my opinion, for ELF, on a forward basis, as you will notice, the earnings expectations are for ELF to continue to grow and of course keep going up from like 341 to 428 to 476. It is trading at a reasonable valuation because earnings expectations are quite good, and revenue also expected to keep going up from 1.2 to 2.8 billion dollars, so more than double by 2027. So the idea here is that ELF could easily get up to its all-time highs of well over $219, $220. So it's definitely got that momentum going for it. And that's pretty much going to be that next resistance to keep in mind. So that's going to be sitting at 220. But the intrinsic value, of course, is going to be sitting all the way down here at closer to $130 a share, kind of aligned with that previous support level that it has validated and somewhat of a resistance for ELF in and around these levels in the past. So that is going to be that support level, and of course a very strong area of demand. Another really strong area of support is going to be closer to here at close to 154, and of course that next target and resistance closer to 220 for ELF as well. So very strong momentum, lots of volume coming in. Congratulations to anybody who was trading or investing in this stock. But this right here is going to be the analysis with the entire sensitivity grid suggesting for of course $130 being the intrinsic value based on 20% growth rate and a 30 times PE multiple for ELF as well. So let me know your thoughts down in the comment section below, and what do you think about this stock? What do you think about this company? Quickly taking a look at the balance sheet as well, just so we have an understanding of where they are sitting in terms of cash and assets. So they do have a positive net debt as of the fourth quarter 2023, so $175 million of net debt positive, which means they've got a little bit more debt than cash on the balance sheet. And then of course, if you come over to some of the other metrics, quick ratio is a little bit under 1. Current ratio is good. Margins wise, return on assets, equity, and invested capital are very strong of 14.8 to as much as 19.5%. respectively for the company as well. And of course, we got a very, very high valuation multiple for ELF at the moment. So hope you all enjoy this video. Let me know your thoughts down in the comment section below. And as always, make sure that you drop a like, subscribe to the channel. Links to our Discord and Patreon is going to be down below. And happy investing, and I'll see you all in the next video.